Hey, welcome back, Strategic Trader Session 4, where today we're going to talk about an introduction to technical analysis. Now, this is an introduction to technical analysis. It's certainly not going to be a deep dive, but really want to understand the concepts of technical analysis and what it is that we're looking at when we're looking at technicals. So, when we are thinking about this, we've talked about the foundations that are a market in session 2, and we talked about how to measure a market in session 3. And so today it's all about understanding what is technical analysis and how do we read the market, right? How do we take a look at it? And there's so many different ways that we can look at it and so many different things that we can think. So what is technical analysis? The definition of technical analysis is the study of price and volume as a method of determining the probable movements of a financial security. Right? That's what we use. We use the study of price and volume as a method of determining the probable movements of a financial security, not the guaranteed movements. But what we want to do is increase our level of probability through the use of technical analysis. Now, technical analysis will never, ever be able to predict the future because it's got to be the study of price and volume, which means it has to already have happened, right? And when we talk about technical analysis, it starts with the simple ability to understand a price chart. That's really where everything starts. Everything starts with the ability to understand what is a price chart and why is it our friend? Why do we use them? Well, in reality, we use them for a variety of reasons, right? We will use them because we can see what's happened. But a price chart is nothing more than the graphical representation of the change in price over any given unit of time. It's the graphical representation of the change in price over any given unit of time. So when I'm looking at technical analysis, let's look at these two axes. I've got two axes. We have time is always going to be our axis on the bottom, and price is going to be our vertical axis. So time is horizontal, price is vertical. And technical analysis in its simplest form is nothing more than the change in price over a given period of time. And what, like everybody says, the markets are simple. All you have to do is buy low and sell high, right? And when we're looking at technical analysis and we're looking at a price chart, we're looking at the change in price over a given unit of time. And that unit of time can be a day, a week, a month, a minute. It's really relative to what the trader's goal is, and we'll talk more about that. But we talk about buy low and sell high. Well, what if I sell high and then later on buy low, right? So this is really going to be where do I make that decision, right? Where do I sell high? Where do I buy low? And that's really what technical analysis, the foundation of technical analysis is being able to see that. And we're going to see it on price charts. Now, there's a couple of different types of price charts, right? Different price charts and different charting types and styles. So the first one, and frankly, this is the one that probably is most common to people, and they see this one on television, is the area chart. The area chart essentially takes a line and each new day or each new week or whatever, however the time at the bottom is, it creates a point. Those points are connected to create a line. And then the area under the line is colored. Now, the area chart is graphically pleasing for most people. It shows it's very easy to see the change in price because you've got that color variation. Well, the downside of this is that I can't see a lot of the subtle nuances in price. Now, a line chart is basically the same thing. It's just without the color, right? A line chart it just lacks the filled area of the area chart. So a line chart and an area chart will essentially look the same. One will just be colored underneath the other. Another type of chart is a point and figure chart. Now, they're totally different than most forms of charting. It's time is not on the y-axis. The point and figure chart actually disregards the passage of time and focuses on price purely on both axes. Now, the point and figure indicates when demand exceeded supply as a price increase, or when supply exceeded demand as a price decrease, using a column of X's and O's. So we don't really dive too much into this from a technical analysis standpoint. There are people that specialize in it, but it actually doesn't have the same impact of time. It's really more focused on on the buying and the selling from that point and figure perspective. Then we start to get into the ones that we will spend much more time talking about. The first is the Western bar chart. The Western bar chart gives us a lot of information about price movement. So the Western bar chart shows the change in price over a given period of time. And that Western bar chart each bar can represent a minute or a week or a day or an hour. And then there's two little ticks on that Western bar. One is for open and one is for close. Typically the tick on the left is the open and the tick on the right is the close. Now, these Western bar charts are useful because they don't have to be in color, right? It doesn't really have to be in color. If I see that the tick on the right is higher than the tick on the left in any given bar chart, I know that price went up during that given period of time. If the tick on the left is higher than the tick on the right, then I know that price went down during whatever given period of time. So Western bar charts were very popular when people were not printing newspapers in color, right? When a newspaper wasn't being printed in color, a Western bar chart made a whole lot of sense. Nowadays, if you're going to do that, you might as well just connect the ticks and fill them in, and that's called a candlestick chart. The foundation of our trading will be done using candlestick charts. Throughout the entire course, really the only charts you're going to see are candlestick charts, because a candlestick chart is what tells me the most detail and it gives me the most intricacy. Now, candlestick charts have been used for hundreds, if not thousands of years, and originally were started with Japanese rice traders. And so these are oftentimes called Japanese candlestick charts, and there's many different the shapes and price patterns built into these candlesticks. So we're actually going to go through a separate lesson on how to read candlesticks. But the purpose of this is a pretty short one, is really just technical analysis is the study of price and volume and the change in price over a given period of time. And the reason we use technical analysis is to be able to identify with a higher degree of probability areas where prices may go up or go down. And we do that utilizing candlestick charts. So if you have any questions about what we covered today, as always, send us an email, support@tradersarmy.com, and then get ready for the next session.